Welcome to How to Start Investing in Germany for Beginners video, and this is going to be the simplest video that you will find regarding investing in Germany in English on YouTube, which is going to explain you everything that you need to know regarding going into the stock market or like the ETFs from a beginner's perspective, because I think it is really important to keep it simple so that you're able to understand and start investing, because a lot of the times when you see the videos out there, it's like already just stuffed up with so much technicalities that a beginner just loses interest right away. So I'm going to like make it very visual so that you can like take a look at different kind of things and also give you an exact path, what you can follow and how you can get started. Many are also concerned about the taxes, so that part I'm also going to discuss in the video towards the end. So let's go to the whiteboard. This is how to start investing in Germany for beginners. I think this is a really interesting topic, especially like if you're these days sitting at home and having a lot of time to kind of like see where you can like, park your money better, because it is really important. Like if you're taking care of money, then at least you're saving it from inflation in Germany, in a country where there's no interest rate on the money that you're just leaving in your current account or in your Giro konto. In those kind of scenarios, it does make sense that you figure out some kind of policies where you're getting better interest rates. Two options are that you park your money in Tagesgeld konto or the Festgeld konto, but there are always issues with that. The first, in Tagesgeld konto, you're not even able to save your money from inflation. And in Festgeld konto, my issue with that is like you don't have the access to the money right away. So you have to wait till that time duration for which you have like, fixed deposited your money is over, and only then you can get the money back, which I hate. I've been in schemes previously where I like kind of like save my money to the side, but I absolutely hated when I had to like pay some kind of extra fee to get my money back because it wasn't in their policies or something. This is the reason I read more and like investing in the stock market, and rather in ETFs, which are a broader diversification of stocks, a lot better option than getting stuck with some kind of policies that you don't really like. So the first thing is going to be income or your blocked account money. First of all, like, make sure that whatever expenses you're going to have on a monthly basis, they're all covered. And there's some kind of like extra emergency funds available on the side. But the fun thing about investing is that you can start investing with as little as 25 euros per month. You're able to invest at least at an early stage so that you're able to get the compound interest, and you don't need to have thousands of euros to start investing, which is like really important to know. So you have your expenses covered. The money that is coming in the current account is going towards the expenses, of course, but you're also like already putting some money aside in the depot. And in a depot, you're able to trade securities or stocks or ETFs or other kind of papers which hold some value. This is what you need. And actually, again, like it is a very, very simple thing to do. If you already have a current account, I think the step of opening a depot can be just like done in 5 minutes. Now then like the identification comes, which can be done online for many nationalities, but for others, like it is highly likely that you have to get a post-ident done or something. Now again, for that there are different kind of time durations. Trade Republic, which is in Germany the second most used depot, is taking somewhere around 2 to 3 weeks to like open the depot, but Comdirect is actually like doing it a lot faster. So like you can even like get the entire like depot up and running within like 5 to 7 working days. So of course there are different kind of opening durations, and this is the reason like it is rather important to get started with these things right away, because till the time you have the depot opened and you can like put some money inside it takes time, right? Because you will have to have the money in your current account that you will have to get transferred into depot, which might take up to 1 to 2 days depending on what kind of like bank you are with. I'm with N26, so like this part happens just like in 3 hours or something, which is very convenient, right? So in depot you have two options. You have either Comdirect or you have Trade Republic. Comdirect is one of the more established depots, and it is like generally used more by the investing community in Germany. When we did a poll, most of the people were using Comdirect, and then on the second place was Trade Republic, and there's a reason behind it. So in Comdirect, you can like, as a EU national, you can open your depot there, or some non-EU students and employees can also open an account there, which is like really convenient. In Trade Republic, it is like generally being open for like some selected EU nationals and also some extra nationalities. I've seen some viewers open the account who are from Egypt with Trade Republic, so that's completely possible. Then Comdirect has 1000 plus ETFs. So ETFs is a collection of stocks, right? Let's say in one ETF, if you're choosing to invest in a large index fund, you might be investing not in just one stock, but 1643 stocks, which is the story in the case of MSCI World. If you're investing in an ETF, which is based on the S&P 500, then you're investing in the 500 companies which are in the S&P index. In general, a huge collection of stocks which are like, available at a cheaper price than the individual stocks. Then you have in Trade Republic only 300 ETFs. So I've like recently kind of like start seeing problems because sometimes I want to like look out for some other ETFs than the ones which are available on Trade Republic. I'm not able to find them. A bit of a pain, but like, it also has its positives. So on Trade Republic, you're only paying €1 per sale or buy. So any single time you're like buying something, buying some kind of stock or buying some kind of share or like some parts of the ETF, then you are paying only €1 if you're buying actively. And if you're selling, then also you pay €1. On savings plan in Trade Republic, you're not paying anything at all. Like many of the savings plan are completely for free, which is fun. On Comdirect, you have €3.9 per buy or sale. When you're buying or selling, think about it that like when you're selling this sometime in like 5 or 10 years in the future, then you would be selling, let's say €1,000 worth of something. And then €4 doesn't really count that much on top, right? So like Comdirect is not that nice when you're like trading actively or like you're trading within the day, which is not the purpose of the video. This video is meant for the people who always wanted to invest in the stocks but didn't really have some kind of like, starting point, because we are going to invest for the longer term. We are not going to do day trading where like, you're putting money inside in the day and like you're just waiting for some kind of jumps and taking the money out. We are just putting the money inside. We are buying and holding for a long horizon, let's say for like 10 or 15 years. But the fun thing there is that you can still sell the shares anytime you want. So like you are not bound by any kind of restriction, which is something I absolutely love. If you're doing a savings plan on Comdirect, you're generally having to pay like 1.5% of the amount that you're, putting inside. That means if you're saving €25, it's only 38 cents. Like if you take it like this, like it's really not that much. With €50, it's 0.75. With €100, it's 1.5 euros. With €150, it's 2.25 euros, right? But like I would generally suggest as a student, like you should definitely start investing with a lower amount, start investing with €25 a month, and which is like very reasonable thing to do. Like 80 cents per day is something you can definitely take out for your future, because once you start now, you will get more and more feel about the stock market because your money is stuck there, right? And like there's a reason why like so many like smart investors and people who are like really wealthy are like using stock market for their advantage. It has a lot of tax benefits, and also you're letting your money work for you. So of course you're earning right now, you're saving the money on the side, and you're saving the money not to just lie in the current account where the money loses its value because of inflation, but you're saving the money to invest in ETFs or invest in stocks. These are the two beginner friendly options that we have, right? Then once you have the depot open, you can invest in like, a different kind of securities. I like highly advise against mutual funds because the first thing is mutual funds are handpicked by a few like financial experts, right? And they're actively managing the funds. That means it doesn't matter if you're doing profits or if you're doing losses. Every single year they are charging a good fee, like 2 to 3% of the entire money that you've invested is being charged in the mutual funds. Whereas when you compare it with ETFs, it's only 0.1 to 0.5%. And many ETFs that you should be investing in is going to be the ones which are going to replicate an index. That means these are very passively managed funds. The fee is low, and most of the times the index funds have outperformed the mutual funds, and you're just paying less fee on that. So it always is a win-win situation. Even if you enter some of the German like investing communities, you will like read a lot more about it. You will see the opinions of different kind of people. They're investing more in ETFs and are having a better experience with that. Another issue with mutual funds is that you can only trade it once. Like, you can trade it at around like 4 o'clock in the evening. But with ETFs, you can trade it throughout the day, which is something I absolutely love. Like I said, I love to have the control of my money. I don't want the money to like get stuck somewhere, which is something that you're doing when you're investing in mutual funds. So ETFs, the exchange traded funds, are a lot better in that case. Now they are beginner friendly because you are getting something for very less price. You can invest with just €25 a month, and you're still able to get the stocks of a lot of different companies, because as soon as you're buying an ETF, the company which is managing that tries to buy the underlying securities, right? Now it depends on a lot of different factors. We are going to discuss that in some other video. But yes, they are passively managed, they have low fee, and they're like very good for beginners. Whereas like if you're directly investing in stocks, like first of all, you need to like wake up every single day and like read the different kind of financial reports and like see what's going on, which one is going up, which one is going down, when to sell, when not to sell. In ETFs, you don't have to worry about that. Like you're just like running your savings plan, you're investing like every single month, and you're investing for the next 10 to 15 years. And then afterwards, you're just having your nice like, 7 to 8% return on whatever the money you're investing. So this is like actually a very good option. Stocks, if you're interested in that, you know, you can definitely start with that too. With any of the depots, that is not an issue at all. Now, the fun thing with stocks is that you are not paying any kind of fee whatsoever. So in ETFs, you still have to pay like, you know, 0.1 to 0.5%, the total expense ratio, it's called TER. This is the money that you still have to pay, but it's like a lot lower, like 2 to 3% in the mutual funds compared to just 0.5 to 0.5% in ETFs. Like it's a massive, massive difference, especially if you take a look at the longer run. So that is super important and something that you should definitely remember. So now let's talk about taxes. You're only paying tax when you're investing in the stock market when you're making a profit. That means when you're selling something and you're making a profit on it. Now the taxes, the capital gains tax is 25% in general, but you also have a limit of 801 euros if you're single and 1602 euros if you are married, so that you don't have to pay the tax on the first 801 euro or like 1602 euros of profit that you're making. After that, it is taxed at 25%, which is still better than the income tax you're paying, right? Like income tax is generally a lot higher, and this is the reason you see like so many wealthy people like invest a lot more money in the stocks and like get dividends out of it, or like, you know, sell it on a regular basis, then pay the income tax on any kind of money that you're earning. So this is the story behind the tax. Very simple. As long as you're not selling and as long as you're not making the profit above 801 euros, you don't have anything to worry about, right? Doesn't matter if you are a EU national, non-EU national, whatsoever. Now I will take you to the screen to show you how you can fill out the application for Comdirect or Trade Republic, whichever one you choose. You go to the links in the description because they will take you to the right places. Sometimes like people confuse the depot with Giro Konto and end up opening something else. So there you can just directly go to the link in the description. For Trade Republic, you click on Jetzt Depot öffnen, right? And then you can like create an account, put your telephone number inside, then you put your personal data, and then the identification happens. The identification then happens afterwards on app, right? So this is the story for most of the EU nationals, but you have to like register first online. Then if you want to open a depot at Comdirect, you just click on Jetzt Depot öffnen, then afterwards you click here. If you're having like trouble understanding, maybe like your German is not that nice, then you can also like use Google Translate right away. So here you just have to fill out your personal details, really simple, like Mr., Miss, and then afterwards if you have a title, and then the first name, surname, and then if you had any kind of like, you know, birth name, then your date of birth, then where you were born, the city, and like your nationality, and then you go further. Then afterwards you will receive a confirmation, and then you have to do an identity check. So that generally happens via video ident. So that also happens online. Otherwise, for some nationalities whose passports are not accepted, they have to do a post ident. So they will have to go to the normal post office and just like, you know, get their identity checked, and that's pretty much it. It's like really simple. Opening the depots are at least the first step in getting smarter with your finances, because in the longer run, it really does matter when do you start, how soon do you start, and how long are you actually, you know, investing. Now, it could be like with really small amounts, like I said, 25 euros are just completely fine, and that's how you should start. But then afterwards, once you get more comfortable, you can, you know, use like bigger amounts, whatever you feel like. Good investing days are coming, so get ready for it and open your depot right away so that you have your depot ready to start investing when those days come. All right, thanks a lot for watching again. I'll see you in the next one.